Alright, welcome back guys. Today is going to be a slightly different video, but I think you will enjoy this. So if you watched my last video, or if you didn't, that's fine. I told you that I was creating a catalog of A+ trades, and typically I've done so much backtesting. As you know, I've done like maybe at most like 28 years of backtesting at this point in under a year, which is crazy. And I wasn't really doing this before because obviously I was trying to figure it out, but I feel like, as I keep saying, like I finally I got it, guys. Like these trades, all of these trades are either 2R, between 2 and 4R consistently. And it's pretty, you're gonna see how crazy this is. So we're just gonna go through, and this is a top-down analysis. So the only aspect that may not be as present in these reviews is maybe like a higher time frame phases of price. Like in terms of like seeing the whole chart, because when you these are only showing like parts of the chart, right? They're not showing like all these other candles over here. So when I show you the daily or the weekly chart, it's probably going to look extremely simple, when in reality the chart probably looks a lot more crazier. But, hopefully seeing this in a simplified way could help you understand how you're supposed to approach the weekly, the daily, the 4-hour, all the way down to your entry time frame using GXT and TTFM. Anyways, with that being said, let's just get right into it. So the first trade is a YM trade, and the first place I started was on the daily chart or the weekly. I might reference the weekly. I won't have the weekly in here if it's not as relevant. Like, for example, if we're trending and we're obviously bullish on the weekly and we're heading towards a target, I won't put the weekly. And sometimes you don't need to go to the weekly, but as I said, it's always good every single week to understand what the weekly is doing and where we're going. But I usually don't include it if it's not that important to the overall trade. You'll see that I do have a couple trades that do have the weekly on here, but for now, the daily should be more than enough to understand what's happening. Now, with that being said, this trade, I believe, was a range high to range low trade. So that would be an external range trade to an external range trade. Reason being, you have this reversal candle, and then you have this candle that puts in another reversal candle that comes back in. You'll see the signature and price in the market very, very, very often. And when we have a candle like this, sometimes this can signal a consolidation or just a matter of like back and forth, essentially. So this, you'll see this in my journals. When you see this red dot, that usually means it's a two-stage crack. So this is puts in an SMT, and this candle was a PSP, meaning one of the assets, whether it was NASDAQ or ES, this candle was actually a green candle. So that's a two-stage crack that was discussed in my last video about signatures that I love to see in price. And that is one of the highest probability confluences that you can have. So with that being said, coming into this particular day, I'm extremely bearish because of the previous day's daily candle. So hopefully that makes sense. It's a external range to external range trade. That is the sequence that we're operating in. And in terms of the phases of price, I can't 100% say because I don't have everything else, but I think this might have been maybe a consolidation per se. Oops. Okay, yeah. So the next one is the 4-hour. So understanding that, why can't I see my arrows? Like, it's not, I guess I have to get closer. Anyways, so understanding that we have external to external range, when you come down to the 4-hour, you're finding a sequence that aligns with that bias, right? So obviously from the daily, I'm already bearish. So I need something on the 4-hour to also tell me like, hey, we're going down. Excuse me. So initially I had this SMT here, and as you can see, we had another crack in correlation. That means on another asset, this candle was a green candle, so that is a two-stage crack. And what ended up happening is that I was looking for shorts, but I believe at some point we ended up going up on all the assets and then breaking this SMT, which is also a high probability condition. SMT breaks are basically just breaking the SMT and then reversing from that level. So yeah, like to see that. So that's a 4 hour. And as you can see, the sequence is an internal range to external range sequence. So this is the phases of price this is a retracement, that's for sure. And then we hit this level, and I guess this is what caused this to come up. So kind of like a reversal, I guess. So retracement or expansion, I guess, just because this is like retracement into this low. And then we have expansion meets expansion up higher, and then we have expansion back down. So as you can see, yeah, so as I told you, this was kind of like a retracement, and then we kind of just V-shaped, right? V-shaped or reversal. I was telling you that because this was like a retracement, and then we kind of just V-shaped. So yeah, retracement, and then retracement meets expansion, basically retracement meets expansion, which is a reversal signature in price. Then we break this SMT, and then we put in another reversal candle, so expansion meets expansion again. And at this point, we now have a swing point from a relevant level, which is internal range. And I know that I want to see lower prices. I know that I want to see this external low be taken out on this particular day, if we can get there. I mean, it could take multiple days, but I'm expecting this to get there here today. Reason being is that this is a very aggressive bearish candle. It wants that low, right? It's showing very aggressive intent. And then we align it. And then we have this swing point here. Very aggressive in and out. Close back within, so that makes it a C2 candle swing point. And then I go down to the aligned time frame. So I went down to the 3, but the 5 could have also worked as well. So then what do? We align, we mark out our original change in state of delivery, which is right here. I didn't mark it on this particular one, but this is the original change in state of delivery. Then we consolidate, then we reverse from this consolidation, and then we go back up into internal range liquidity, and then we put in another leg of manipulation. So this is a reversal back down below here, taking out this external low. And then this would be our continuation, because the continuation is a continuation of the original reversal. We came back into internal range, we came back into a relevant level, and then we reverse from there. And then, so this is my entry. As soon as we took this low, this is my entry because this is the continuation. And then just to understand, and then I'm just going to continue because I like to read and decipher phases of price. So then after that, we ended up reversing back within this candle. And then this candle took the high, and then we came back in. So then after that, we kind of just consolidate here. And then we slowly start to go up. What is this? This is a retracement back into internal range again. And then retracement meets expansion, right? Phases of price, right? Expansion meets expansion. Expansion meets expansion. Expansion meets reversal. Reversal goes into expansion. Expansion meets expansion meets expansion. And then we basically consolidate. And then we start to expand again, because I guess this is another reversal, and then we start to expand. But this is not a relevant expansion because we're not reversing from anything. This is a failure swing. So then we end up coming back. We end up reversing and then retracing back into internal range. And then we immediately start reversing from this level. This is, look, whatchamacallit. This is trendline liquidity right here. So the price just automatically cuts through it like butter extremely aggressively. Price cuts through trendline liquidity so quick and so fast. I actually love to see setups and we're like this, and we're actually going to go over a couple, and then we just start to plummet towards external range liquidity. So yeah. So one thing I've been starting to do now is deciphering lower time frame phases of price, because a lot of times some people will tell you this, but I'm going to tell you again, or if you haven't heard it before, then this is the first time you'll hear it from me. What happens on the higher time frames happens on the lower time frames. What happens on the lower time frames happens on the higher time frames. If you can read and decipher phases of price on the lower time frames, you can do it on the higher time frames. If you can read and decipher phases of price on the higher time frames, you can do it on the lower time frames. So this is something that I've been doing now, deciphering phases of price. And actually one of the recent trades I took was like absolutely crazy because I was deciphering faces of price like on the 5 minute and it was insane. And I ended up getting a 3R from that. Maybe I can go over that later. I just have a lot of tabs up. Ooh, I don't know actually. I have over here, but I have like a million tabs up and I don't really want to show all that. So I'll probably come back later. Anyways. So that was the first one. So that's trade 1. Let's go over trade 2. Probably close this out because... Alright, next one. So, this was also a YM trade. And this could have possibly been a... not a consolidation, but... maybe range low back up to range high. So maybe a consolidation. Kind of similar to the last one, basically. Or we could have been an internal. I think if it were an internal range, I would have marked it out, but whatever. Anyway, so previous day printed as a very bullish candle. We have a one-stage crack, or otherwise known as an SMT here. So coming into this day, I'm like, okay, we're going to be bullish, right? Now, this is where things get a little bit interesting, right? So as you guys know, previous day high is a common target. One of the most common targets that people talk about. So previous day high, we could have also went here, but it's really far. But yeah, I mean, if the sequence or phases of price supported getting up here, then I would definitely do it. But for this one, I only targeted previous day high. Now on this, so as I mentioned, I do use the 7-hour when it makes sense. And I felt like for this particular one, the 7-hour made a lot more sense than the 4-hour. So I don't actually have a 4-hour chart here. Because the 7-hour just was a lot more clear. But in other words, this 7 o'clock candle finishes at 7 o'clock. So this is the opening. Yeah, so finishes at 7 o'clock and this, or 8 o'clock I should say. And this candle opens at 8 o'clock, which is exactly when I get to the charts. So that's why I love the 7 o'clock time frame, because it aligns with when I get to the charts. So if I see a reversal candle coming into 8 o'clock off of this sequence right here, which is internal range, which is a fair value gap here off to the left into external range. And I think this is also a consolidation. This is also a consolidation, right? Because all these candles, or this one anyways, is inside this candle. So that makes this a consolidation because it's an inside bar. So this is actually this is actually two sequences in one. It's external to external, and it's also internal because there's a fair value gap here to external range liquidity. But anyways, after this 7 o'clock candle close, coming into 8 o'clock, which is when I start, I'm expecting this candle to just expand, understanding that previous day put in a reversal and a bullish candle, and understanding that the sequences on the 7-hour aligns with that bullish narrative, because we have another 7-hour swing point from an internal range liquidity pointing us up to the upside. Now, after this, so after the 7-hour or after the 4-hour, you want to get to a time frame that so I've primarily been trading intermediate. Sometimes I'll go down lower if it makes sense. I can't really tell you how I know. I just know, like, I just go and I can see, like, okay, this actually looks like this makes sense. So I just go to the time frame that looks like it makes the most sense. And I know that's vague, and I wish I had a more concrete answer for you, but that's just my experience so far. Maybe I'll come to understand it more on a deeper level how that works. But as of right now, like, once I'm on the 4-hour, 7-hour, and I have a swing point, I kind of just drop down to the hourly. Then if the hourly is not giving me much information, like if I can't clearly see the changes state of delivery and the continuations on the hourly, then I know that I probably need to drop lower to like a 30-minute or a 50-minute. It's basically just going to the time frame that's more clear and easier to decipher. But you need to be able to clearly see a change in state of delivery and a continuation. If you can't see that on the hourly or the 30-minute, that means you need to go lower. So with that being said, I went to the 1 hour, and this is very rare. It's very rare that I'll take a trade on the 1 hour, actually. So this was really interesting for me. But we have the 1 hour change in state of delivery. And then this is going to be, obviously I told you I take a order block continuation. There's different kind of order block continuations, right? There's a propulsion block, and a propulsion block is basically just an order block that's created off of the original change in state of delivery, and this is what this is. So this candle closed, and I put my entry a little bit lower because I wanted to target 2R. If I had targeted here and put my stop immediately at here or a little bit higher, I guess I probably could have still made 2R, but I just wanted to ensure that I was definitely going to make that 2R. And as you can see, this propulsion block is set with SMT in a two-stage crack. So on another asset, this candle would be green. So it's a two-stage crack and correlation. And as I told you, I love two-stage cracks and correlations. So afterwards, this just expanded. And I believe this was a 930 driver as well. So as soon as I set the trade here, the driver just immediately expanded. And that's pretty much that for this one. All right, going on to the next one. I don't know if I'm going to go through all of these. Let me see something. How much time has this been recording for? 15 minutes. Okay, let's keep going. Oh man, this is a lot. So anyways, so this is another interesting one. So this one's going to be on NQ on the daily chart. So on the daily chart, we put in a swing point here. And this potentially, I think, what is this actually? I can't tell what sequence this is or what the phase of price is this. I don't have enough information. All I know is that we did sweep this external high here on a different asset, hence why we have this chain SMT. And then with the SMT, I would expect the next day's candle to be bearish. And as you can see, it did go down lower. Now today we are inside candling, right? And that can be, sometimes it can indicate a consolidation, but that doesn't mean the opportunities aren't there, right? So if we're respecting the 50%, then maybe we can still see a chance of expanding lower. With that being said, I don't have enough information other than the fact that I probably want to see bearish prices on NQ on this particular day. So interestingly enough, I didn't end up taking a short because I ended up in a consolidation, hence the low here. I was in between this candle. So this was a consolidation low, and then this was a consolidation high. And as you can see, this also overlapped with internal range. So you could also view it as internal range liquidity to external range liquidity. But to be honest, if I'm being honest, I thought we were going to go lower because the 1800 candle, which is the first candle, the first 4-hour candle that makes up the day, is not set with anything. We typically want to see a reversal off of the 1800 candle to give us direction, but there was nothing. So I thought we're going to open and go lower to tap into the opening price of the 1800 candle. But as you can see, that's not what the market had in mind here. So if we go to the next, sorry. So if we go to the next candle, because you can see that we took this low and then started to expand it away, I need an aligned time frame that's pretty much clear. So on the 15, you can see that we have a swing point down here, which aligns with this 4 o'clock expansion, well, reversal into expansion candle. So you can see at exactly 9:30 we put in a reversal right here, and this is another signature in price I love to see, which is trendline liquidity, because price just cuts through it like butter. This is another signature in price that I've learned to read very well, and it really does allow, it kind of gives you narrative in a sense, because when I see the swing point and I see trendline liquidity, I'm like, yes, I know we're going up here for a fact, because the market just cuts through this, bro. Oh my gosh, I love it. I love it. This has actually become one of my favorite signatures to see, and you're gonna see this again because I've got some runners that go for 4R, some for 3R, just from using this as a confluence, seeing trendline liquidity. Anyways, with that being said, so this is one where I did not take a trade on the intermediate time frame because it did not make sense. Like, for example, I can't see the change in state of delivery easily on the 15-minute, and I cannot see the continuation. So therefore, I have to go lower, right? So it's really a matter of like what is clear and on what time frame. If it's clear on the 1 hour, I'll take the trade as long as it's delivering 2 to 3R, or should I say 1.5 to 2R. And then vice versa for the 30-minute and then the 15-minute and so on and so forth. So for this one, I went down to I think it was the 1 minute. Okay. So this one's a little bit different. This is another entry, It's kind of the same thing, but it's a little bit different because we take an inverse fair value gap with a bearish fair value gap. Sorry, with inverse fair value gap with a bullish fair value gap. So this is another way to get on side. Like, this is totally valid because you can trade an inverse fair value gap. But like I said, guys, I don't typically do that. I think this is the only one of its kind so far in my journal. But I have seen this kind of signature pop up before. So with that being said, I can take an inverse fair value gap. For me, my rule is I can take an inverse fair value gap if there is a bullish fair value gap along with it to support price higher. And as you can see, that's exactly what we got here. We end up coming lower. So anyways, let me tell you what happened. So sorry, I'm like stuttering. We expanded away. We reversed, right? Took out this close over this inverse fair value gap, and then we took the high, reversing from here, and then retracing, or expansion meets expansion because that's a reversal, right? Into this fair value gap, and then we have expansion meets expansion, which is a reversal. And then we close over the OB, which is a strong signature in price. And then we basically just expanded exactly from there. And I think this one might have also... No, this was like the opening of the 10 o'clock candle, I believe. And we just kind of expanded straight into that trendline liquidity like a knife. Immediate expansion. And I think this trade only took like a couple minutes, like 3 minutes or something, which is really cool. Alright, so that's that one. So the next one. So this one is a simple range low to range high kind of scenario, I believe. Because we took out previous day's low and now to go to previous day's high, essentially. Which, ow, sorry, my leg's kind of, ow, my leg hurts. Okay, so when you come down to the 7 hour, again, I'm using 7 hour just because it's a little bit more cleaner. If I'm using the 7 hour, that means I'm using it because it was just a little bit more cleaner than the 4 hour. The 4 hour wasn't giving me a very clear narrative, or it just might have been like a little bit harder to decipher. Like, even if you know you're going to be trading higher, it's still, Anyways, with that being said, the 7 o'clock candle put in this reversal candle, and I'm like, oh, bet, because we're going back into internal range. So this is external to internal, right? So sometimes we're not going to get all the way up here, but like this is the sequence, right? And it aligns with what we're seeing on the daily, right? This is the sequence, external to internal. So now what do I do now? I want to go to a time frame where I can easily see the change in state of delivery. And then, as I said, like if you go over here, we do weekly analysis, daily analysis, and then daily analysis, and then we find our 4 hour, and then we align our 4 hour and 7 hour with the daily analysis. So for this one, like, in particular, our daily analysis says that we are bullish, right? And then our 7 hour narrative and sequence says that, well, this is a reversal. What happens to a reversal typically? We go into expansion. So external back into internal range liquidity, right? Which supports the overall narrative that we basically planned out on the daily chart. So what's next, right? So then we want to confirm the 4 hour or 7 hour CISD, change in state of delivery. This will help with swing points, right? So then, oh, sorry. Where am I? Oh my God. So then we want to go down to a lower time frame to confirm the change in state of delivery. And that's basically the time frame. Oh, I did include the 4 hour. Okay, so yeah, we also have a swing point on the 4 hour. But as you can see, like the 7 hour just combines that into one candle, and it's just a lot nicer to look at, isn't it? Like, wouldn't you prefer to look at this than this? Like, come on, like this is pretty nice. Anyways, with that being said, the 30-minute was actually giving me a pretty good CISD to work with, and we had an inverse fair value gap. So this is actually, at the time, I wasn't really 100% sure because I was not that good at reading phases of price. I was okay, but not like good. But now that I'm better, I'm like, okay, cool. I understand what's happening here now. So I'll tell you. So we reversed, yes. And I think in my last video, I said that I wasn't a fan of the fact that it took so many candles. And not only that, it's kind of creating trendline liquidity as we're going up, which means that price could, and what did I say happens when you trade, when you have trend line liquidity. Price can just cut through that, like, sorry, something just fell upstairs. Excuse me. Whew. Okay, sorry, I had to take a second. So anyways, price can just cut through that like butter. So, this was a signature that I like to see. At the time, I didn't really fully understand it or necessarily trust it, but now I understand because we ended up retracing back into this fair value gap, right? If we have things that would make price want to revisit this, it would be great if we had a PD array or a area that would support price higher, and we did, right? So if we're lucky, then price won't come back down here to sweep out all this trendline liquidity because we have this fair value gap and this inverse fair value gap supporting price higher. And then another signature in price, right? So obviously, because everything is here is an inside bar to this candle, this is a consolidation, right? This is a consolidation. So expansion, right? And then we have expansion meets expansion, I guess. Meets expansion meets expansion. And then we ended up retracing. It's just kind of a weird thing to say, but like I guess this is an inverse or bearish fair value gap. So yeah, we technically did retrace. And then we kept on, and then we basically expanded back lower, and then we went into consolidation, and then we reversed from this fair value gap, putting in this SMT, and then we expanded, right? Whew. So yeah, and then another thing to keep in mind is that we had a close over this OB. Continuations, we want to have a close over the opening price of the OB. And another thing that gives me confidence in this trade, maybe not at the time, but now, is the fact that we have this high still available to us. And over here to this here, this is a failure swing, right? And the market loves to go towards failure swings. But not only that, all of this here is also trendline liquidity, right? And these are also equal highs. Like, there's just so many things stacked, and it's just like the market loves all of this. I'm going to just go for it. And I believe this trade was a 2R. And I think this also overlapped with the 9:30 open. So price just kind of bammed, bro. It was crazy, crazy. Shoot, next one. There's so many. So the next one. Oh, I love this one. Oh my gosh. Wait, this one's actually really good. This one's actually really freaking good. Okay, so the phases of price for the daily chart here. Obviously, you can see my first thing my eye goes to is the fact that we have a reversal candle here. But then you also want to identify the phases of price. And what phases of price are we in? We are in a consolidation, right? Oh my god, I can't speak. A consolidation, usually a manipulation of a consolidation is external range to external range, or external range to enter into the EQ. So, but I thought we had a really good chance of getting down to this external road. The reason being is because we have all this trendline liquidity. Like, that keeps coming back, guys. Oh my gosh, trendline liquidity is like one of the best things to see in the market because price just cuts through it like butter. But it makes sense, right? Because a retracement, if we retrace, we have to expand. Just understanding phases of price. Reversal is expansion meets expansion, right? Retracement goes into expansion. Consolidation also goes into expansion. Expansion meets expansion, right? What am I missing? A reversal is expansion meets expansion. A consolidation is expansion meets consolidation meets expansion. Retracement is a retracement meets expansion. Yeah, man. Getting a little sleepy. Anyways, if we're looking inside this, actually, sorry guys, I'm actually like falling asleep. Oh my god. I should have brought water. Anyways, so we have the swing point. So coming into this day, I know that we're going to be reversing off of this candle, or due to this candle. So coming into this day, I want to realign myself with a 4-hour swing, ideally. And essentially, we ended up putting in this massive 4-hour swing, right? But what is our 4-hour profile, right? Because you're probably like, well, what the hell? What 4-hour are you referencing? I'm operating in this candle or this candle, which this candle would be the continuation. This is, so if this is 6 o'clock, oh, I'm so sleepy. Oh my god. Hey, this is a 6 o'clock candle. This would be 2 o'clock. This would be what is it, 2 o'clock, oh my god, 2200 and then 1800 or something like that. Sorry, I'm sleepy. But anyways, as you can see, this is a consolidation because we're just internal to this candle and this candle. So how do we leave a consolidation? By manipulation. So expansion means expansion. That's a manipulation. So this is our swing point that we're working off of, and I ideally want to take it to range low because it's trendline liquidity. So I wasn't really caring about this gap as much. Now, with that being said, I'm going to go down to an aligned time frame that gives me the best CISD / continuation. So as you can see down here on the 30-minute, and I don't go down any lower than the 30-minute because I don't need to, we have this V-shaped reversal into expansion, and then we come back up, and then we kind of consolidate for a bit, and then we manipulate out or this low, so expansion meets expansion, but it's not a relevant reversal because this is the most extreme one, so this is a failure swing, right? So with that being said, we reversed and then expanded back into the fair value gap, and then I'm going to assume here that we expanded again back out of the fair value gap and entered here, so that, yeah. And then what ended up happening is that we ended up taking the low, reversing back in, taking the internal range, reversing back out, and then taking this low and then reversing back in, and it was just like, bro, this is a lot of back and forth. And then we ended up reversing ultimately off of this low. And then we've kind of just been making trendline liquidity ever since, really. It's kind of crazy. And yeah, we get some more support up here. All the way down to external range. Yeah, man. I'm getting so tired. I don't know why this is happening. This is another one, I think. Oh boy, I think I might have to make a part 2, guys. I'm so tired. I'm gonna make a part 2. How about that? If you guys like this, leave a thumbs up. Let me know in the comments if you want to see the rest. I think I went over half of it. Yeah, half of it. And I actually have another one to log, so it's gonna be 11. So I went over 1 through 5. So if you want to see the next batch of A+ trades, let me know in the comments below. Leave a thumbs up, and I'll see you in the next one. Don't forget to like and subscribe. Now, peace.